Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the strategies that you need to follow after a days of truncated action. Remember, we will be reacting to 2 days of move on the Wall Street and of course a reaction in the Asian markets as well. We did see a lot happening over the 1 day off that Indian markets had. President of United States, Mr. Donald Trump, did announce that 90-day tariff pause on about 75 countries, a steep 145% of a tariff on China. So between the US and China, the trade war has escalated, but worldwide there is some sigh of relief. Remember, the US markets on Wednesday soared sharply, but right after there was some of the gains, at least 1/3 of them that were given up. This morning, Asia is again reacting to those nerves being brought in the overnight trading action on the US. You can see across the board, there is a dip. China, Hang Seng, Nikkei, Kospi, all of them trading with some losses. The GIFT Nifty, however, is looking at about a 400 point of an uptick at 22,937. Now we will see how the markets really open up in trade. Remember, we will be also looking at how various asset classes have been reacting to the tariff pause on the one hand, but the escalating trade war between US and China. A whole host of stocks that will be in focus. Remember, the IT sector earnings have kick-started with TCS reporting its numbers. Slightly on the softer side and muted below the expectations on some accounts for sure. When it talks about the revenue, the profit growth as well. And of course, the important factor will be as to how some of these moving parts in their biggest playground, US, now staring at some signs of a recession, we'll be looking forward to as far as the ID sector is concerned. Apart from that, we also have some more earnings from Anand Rathi Wealth to be looked at as well, and a whole host of stocks that will be in news. The markets have started to tick now. 22,292, about a half odd percent of a lower tick is what we are looking at as far as the Nifty is concerned. Let's hope that this improves for the better, because remember, we missed out on reacting on the trading tariff trade pause at this point in time, and that should probably improve for the better. Let's in fact welcome our guest on board. We have Mayuresh joining in, Head of Equity Research, William Neal, India. Warm welcome, Mayuresh, and good to have you with us. We're color coordinated this Friday and hoping that, things also align with our own, thoughts and processes. What do you anticipate? We had that extremely good news when the markets were off, and we really were hoping that Thursday should have been open for the markets to get that benefit of the tariff pause. But then a day later, things are not very good as far as US and Asia are concerned. What do you have to foresee for India?
Everybody was hoping that yesterday the markets would have been open. However, I think what is still happening as a tug of war between the US and China as far as the tariff impositions are concerned, I think that is creating a huge headwind for the market. Because with such elevated tariffs, the spillover effects, specifically for emerging economies, if China is going to get hit significantly, what does it actually mean in terms of a large part of the goods being dumped outside of China if this continues for a longevity of time? I think that is where the risk is emanating from. And obviously, I think if this happens, because China is one of the biggest manufacturers of a lot of commodities or a lot of elements that are probably consumed by the US consumer in the end, how does that ultimately reflect in consumption trends down the line? I think that is what the market is probably fearing about as we speak. But again, respite in terms of the clawback that has happened, respite for India specifically, in terms of the additional impositions that have now got relaxed, at least for the next few days or the next few weeks. And therefore, I think striking a trade deal with the US probably seems to be on the card. A lot more countries are negotiating with the US as far as their individual deals are concerned as well. So there is some element of hope that ex-China, I think there will be a lot of negotiations which will bring respite to the overall global trade. But I think China probably still remains an X factor in this whole equation. How does US resolve its disruptions with China as far as tariffs are concerned is something to be seen. And again, let's not forget, I think the sector-wise impositions still continue. So whether it's autos, whether it's steel, stroke, aluminum imports, that still continues at the rates that it was. Therefore, I think one needs to take this with a pinch of salt and see how things are moving over the next few weeks. But yes, for India, relatively better. A better scenario is being put out. But as I said, I think with the mix of how the globe is probably positioned, we might also feel the after or spillover effects.
Absolutely. So in China again, one aspect is that everybody thinks that when US and China are at loggerheads, it could be seen as big advantage for India. I mean, we're already seeing what's happening with Apple airlifting so many tons of phones from China to save additional tariffs from there. Can all of that come to India? And similar aspects, will what will that mean for India and Indian companies? Do you think it is advantage India? And B, that when two of the largest economies in the world are at loggerheads, and it seems like probably trade will virtually freeze, then what is the repercussion that the world can expect?
So two parts to your question, Sakshi. One, I think the immediate effect of India, I think the sentimental effect is obviously positive. But let's come to reality, right? I think we do not have the manufacturing prowess that China probably has at this juncture. Obviously, I think a lot of European clients in the US are probably looking at China plus one. That's the reality, no two ways about it. But for us to build in those integrated facilities is still going to take time. And it's going to be a lot of cost and time effort. So over the next few years, as our facilities evolve, obviously, I think we become a good competitor to China in terms of providing what the globe probably needs, and in terms of sufficing that the demand is probably made from India as well. For Apple in particular that you just spoke, I think, yeah, maybe a few quantities might get lifted, but it's very difficult to probably just have a policy change done overnight in terms of shifting your processes. And there have to be capable enough processes to probably manufacturing that much. Yes, I think as a percentage of what you're manufacturing right now, it's significant. But I think it's still going to take time. So I think we need to take it with a pinch of salt that it's going to take time in terms of competing with China at that scale. And obviously, I think our companies are gearing up to it. There is China plus one. So over a longer period of time, obviously, I think it's going to be beneficial. The second aspect to your question in terms of the spillover effects, as I was just mentioning, it is beneficial to a certain degree for India compared to the rest of the globe. But you're not completely immune from global trade. So to that
Yeah.
extent, what happens with US on a one-to-one, it does benefit India, our exporters as well. And therefore, as I said, India much better placed compared to the rest of the globe. But we might still feel if this continues and lingers on with China, some of the spillover effects in terms of, as I said, if China starts dumping across the globe, a lot of their manufacturing products that they're probably doing, it might have implications in terms of pricing related to a whole host of these products in emerging economies and as well as currencies as well. So you need to watch that.
Absolutely. The Nifty is now a tad bit better than the opening pre-open tick. So 22,652 is what we're looking at. A percent higher is what is getting indicated. And in a minute from now, we will see how it freezes in the pre-open trade and what will be the implied open. We'll keep an eye out on that. But again, coming back to what's happening on the tariff space, there is this increasing talk about how a trade war between two large economies could actually lead to a potential recession in the US. What are the chances of that you are penciling in, Mayuresh? And what could be the impact of that India will have to face? Not a direct hit, probably an advantage, but still dealing under the recessionary ripple impact.
Good. So again, I think the base case scenario that is getting built in, if this continues, and again, if this is a longevity time period that we are talking about, because this is just not tenable, 180%, 150%. This is just not tenable in scheme of the global trade and in scheme of how the global operations probably operate out of. Having said that, I think the base case scenario does point out that if this continues for a long longevity of time, there will be a recession in the US. Now, the magnitude of the recession really depends. Because if other countries are able to negotiate well, and the US is able to negotiate well, with a lot of countries ex-China, even the European Union is probably negotiating with the US. The chances of a hardcore recession probably come up quite significantly. So you might have a mild recession in the US, which can probably get gestated by the markets, but it has ripple effects as well, right? Because in a recessionary situation, discretionary spending goes off. If that happens, what probably happens in terms of our export oriented sectors to a large extent? Obviously, I think the domestic sector is well shielded, well guarded. That is where the thesis is coming back to. The government capex is coming back. There is expectation inflation is cooling off. The RBI has given clear statements related to the cool off in inflation. Liquidity is decent in the system as well. And therefore, I think India, again, with the construct of all these events, with a mild recession in the US, might actually be better placed because I think the US investors or equity investors might be actually looking at markets which are doing and faring better. And again, outside the US, I think a lot of markets are going to probably get hit and feel the pinch in terms of GDP
Yes.
contraction, in terms of trade deficits probably going higher as well.
Yeah. Mayuri, I think I also wanted to bring in here what's happening to the other asset classes like bonds or the US dollar, for instance. We have been seeing that there is some sentiment that in case the US economy, enters recession, these assets which were usually seen as safer assets are not being seen as so. What exactly should one be really looking forward to? We've seen dollar index fall below 100 for the first time since July 2023. What exactly is your thought here?
No, so I think it's going to be evolving, right? Because I think there was one note that I was reading that China holds almost 700 billion in terms of US treasuries. But it's not just possible to go overnight and probably start selling this, right? Because you're also going to feel the hit in terms of selling these treasuries and take a hit on your MTM margins as well. Again, I think in terms of the currency adjustment, what is really happening in the globe right now is it is a confusing and an uncertain aspect. Whether a
Mm,
recession will happen, whether it's mild, whether it's going to be a really strong recession that the US economy will face, what happens to the rest of the globe? Does EU also probably face stagflation problems? Does the rest of the globe probably face stagflation problems? And therefore, I think if you're probably looking at the construct, from an asset allocation perspective, you should be having some element of bonds, either short dated or long dated, depending on your risk reward. But I think they should form a part and parcel of your portfolio, at least in the Indian context. Because I think we are better placed off, as I'm time and again repeating, in terms of the global cues. Second, I think from a macro perspective itself, where I think the rest of the globe might actually struggle with stagflation, we might actually have a decent amount of GDP growth, even if it contracts a tad bit. It's going to be decently good enough compared to the rest of the globe. And therefore, I think on all key matrices that we're talking about, inflation coming off, abundant liquidity in the system, tax collection remaining stable, expectations of corporate leverage still extremely low as far as the Indian context. I think that will point out that at least our long-dated bonds and the yields that it might get generated based on our macros and micros will be better off compared to the rest of the globe. So again, I think if this scenario probably plays out, both from an equity perspective and from an FDI or FPI perspective, as far as our debt instruments are concerned, we might be better placed compared to the rest of the globe. So from an asset allocation perspective, some allocation depending on the risk reward, as I said, either in short dated or long dated tenors, is also something that is warranted.
And what about the flows then? Because dollar index down, yields are holding up. What happens to the foreign flows?
So at some point of time, right, the investors will probably need to take a call in terms of asset allocation outside US. So if your strategy, and a lot of US investors do have this diversification strategy, where are they diversifying? There was a huge China trade which happened a few months back. Now, do we see some element of reversals with these tariff impositions that happen, specifically as the China trade is concerned? What happens to Japan? Do they again get into those similar problems of the past, where they're probably looking at struggling growth, and the union as well? So if you probably look at the global construct, are China flows reversing back into India? Will there be a construct where I think a lot of US investors, ex China, are probably looking at India as a destination in terms of parking their money? And from a global construct as well, a lot of the commodity-driven economies, which are probably dependent a lot more, I think that risk factor also starts coming in. And therefore, I think FDI flows would probably find it more sane to probably come back into India. As I said a few weeks back, as I've been always maintaining, I think India might just remain the best performing market as we speak compared to the rest of the world.
Okay, got that. What we'll do is we'll focus a bit on the pre-open trade as well, and we'll come back to the conversation there. The Nifty is indicative of an opening near 300 points higher, about a 0.8% of an uptick on the Nifty Bank as well. We are seeing some signs across the sectors as well, even IT for that matter, indicative of an opening on a higher end. Consumer durables. Let's pull up some of the stocks for us to really see. Let's pull up IT stock TCS. That's the first one that we are going to be looking at today post the earnings. Remember, earnings were slightly on the softer side. We are also seeing some brokerage houses updates where target prices are having been cut as well on TCS. But the stock right now is indicating an opening about 1.3% higher, 32.89 on TCS at this point in time. Let's also pull up the other heavyweights, Reliance Industries, banking names as well, to see how those are also reacting. And we'll also be looking at one more aspect today, 0.8% of an uptick on Reliance Industries and 1195 kind of levels on that one. Banking space also, I think some indications are on the higher side. HDFC Bank about half odd percent up. Of course, let's also pull up Anand Rathi Wealth. That will be another earnings counter that we need to watch out for today. And that will be important to watch. Their profit has increased year on year by about 30%. So about a 3% of an uptick is what you're looking at. What we'll also look at is how some of the gold financiers will be reacting. Remember, the draft guidelines have come in, and we may be seeing some kind of a reaction onto that front as well. Muthoot Finance, Manappuram, IIFL, they will be reacting. There are some downgrades that are happening by, brokerage houses like a Kotak, for instance, has downgraded Muthoot, trimmed the target prices there on these draft guidelines. So that will be also in focus. We'll keep an eye out on this aspect as well. I think there is a decline of about 2% on this one. So we'll focus on all of that. Mayuresh, your first call on the IT stock TCS post earnings.
I think inline set of numbers. I think a couple of encouraging signs. TCV tad bit better than what the street expected. Margins probably in line as well. And therefore, I think in terms of how the construct probably looks in terms of the landscape, and again, how discretionary spending patterns will evolve over the next few weeks, next few months, is going to be extremely critical for the sector as a whole. And key sectors that they're probably servicing as well, whether it's BFSI, retail, manufacturing, what kind of scenario is getting painted in terms of how these sectors are expected to do in lieu of how the globe is probably movement at this juncture. So again, I think inline set of numbers that we say.
Okay, we'll discuss this a little bit more, but the markets have started to take on a higher end. So you actually see strong momentum on the Nifty today, 22,727 now with us, 320 points higher, 1.5% of a move on the higher side. The Nifty Bank also up by over a percent. You can see 50,800 levels, 550 points higher as far as the Nifty Bank is concerned. Even the mid-cap index is up by about 1.8 odd percent is what you're looking at. Strong momentum there too, about 50,000 to 28 kind of levels that can be seen. There's a 650 point of an uptick on this one. Let's look at the IT index that's up by 1.6% now. That's also opening higher. Even the advanced decline ratio is skewed towards the advances, 1778 advances to 71 declines at this point in time. So the market mood is on the positive side. We are seeing an all across broader markets. Even small caps are up by nearly 2%. So that's also pretty positive. Benchmarks, frontline indices, broader markets, all of them are up and about. Let's look at all the sectors of the Nifty and see if there is any red. No, all the sectors are opening in the green, and that's a good sign. So you have autos up by 1.7%, FMCG up by 1.2%, IT up by 1.3%, media stocks up 2%, metals 3.7% higher, pharma up 3%, 1.7% of an uptick on PSU banks, private banks up half odd percent, real estate 1.6% higher, and all the sectors definitely opening in the green. On the Nifty, the top moving stocks, we have Sun Pharma, Cipla, Dr. Reddy's. Pharma stocks definitely taking the front row today. Tata Motors, Tata Steel. Those are the other names that are actually doing well. In fact, all the stocks on the Nifty are in the green, and that's a positive sign as well. You can see across the board a strong momentum that can be seen. Let's look at the Nifty 500 names as well. to see how some of those stocks are also moving in trade. PI Industries up 6%, Wellspun Living up 5%, LT Foods, Electra Green Tech up 5%, Netweb Technologies, Kaplan Point, Oro Pharma, Lupin, you have Apar Industries, all of these stocks that are strongly higher in trades today, a very strong momentum that can be seen. Let's actually go across to our another guest who's joining in, Kunal V. Parar, Vice President Technical Research at Choice Equity Broking, now joining in. Kunal, warm welcome. Good morning to you. How do you see the opening today?
Opening is very good, up by 300 points. But main question is who's going to book in this market because who had created a position during last trading session. So no doubt opening is very good, but the main question is related to the booking part. Now, if you talk about Nifty side, 22,720 is current trading, and we may see a strong resistance at 22,900. Now, this is the gap down opening which we witnessed on 7th April. So it's upper band of that gap down opening 22,900. If Nifty sustain above this level, then only it will be calculated as upside momentum and recovery that we might see up to the level of 23,400. So from the present level, 22,900 might act as a strong resistance. If Nifty cross this level, then 23,400 and 23,900 would be there. While if you talk about downside support and right timing, 22,400 act as a strong support.
Okay, Kunal, before we go back to Mayuresh on TCS, tell me what is your call on TCS at open?
Well, I'm not going to recommend any fresh call as of now because risk reward will not be in favor for creating any longer short position because volatility is too high. It's on peak side, so better to watch this market as at present level and just study the market momentum and volatility.
Okay, got that. Mayuresh, looking at the current uncertainties, TCS has deferred the salary hikes at this point in time. They have doled out dividends as well. Profits slightly softer. In fact, India revenues have also been on a slightly softer side. So, more than anticipated impact of BSNL revenues on that front as well. US and Europe continue to be soft as well. What exactly should one foresee from here on for the largest company, and what does that indicate for the rest of the IT majors who will be reporting earnings now?
No, so Sakshi, I think 3 points, right, which are going to be very, very similar across the IT landscape. One, I think in terms of the order wins, what are the what is the management perception in relation to the order wins, assuming macro uncertainty? Second, I think pricing related to these orders. What probably happens in terms of the pricing of these orders? And third, are you seeing any element of deferment is happening generally as a macro element? And now certain stocks might be outliers in all these three arguments as we put forth. But we would actually like to see how the earning season is playing out, whether it's large cap, mid cap. And in fact, we have added a rider as well. Since we've got global coverage as well, we actually want to see how global IT companies are also performing in this quarter and what their commentaries are to probably take a very, very holistic view in terms of the spending patterns that are getting the same.
Okay, fair point. Any key, positives that you believe or you're betting big on in the IT sector? Any select stocks that you still prefer over the others? I mean, there has been a lot of talk, before the earnings started off, brokerage houses were still believing that it will be the mid caps that will continue to outperform. What's your sense? And in any key stocks that you are more bullish on?
No, so apart from being bullish, I think that's a different argument. I think a couple of stocks that we've got on our radar, which I would like to see personally in terms of their earnings delivery. One is Coforge and one is Emphasis. Obviously, I think the numbers so far have been reasonable for Coforge. They've obviously got decent enough deal signings that have probably happened in the past few months, past few quarters as well. So how is execution probably happening? Does that translate in terms of stability in reported EBIT margins as we head ahead? And what does the management perception believe in terms of the spending patterns coming through? So this is one interesting stock that I will keep on my radar. And the second one, as I said, Emphasis. Obviously, it has got played through in terms of reported numbers. But again, I think in terms of the component of the applications that Emphasis probably has, specifically in terms of AI and Gen AI, it's almost 40-45% of their overall book as we speak, and is inching higher every passing quarter. That can be a huge value disruptor compared to the entire mid-cap IT space. as we move into the next few quarters with better EBIT margins and better revenue visibility. So again, I think these two stocks is where I would keenly watch out for numbers.
Okay, that's as far as the IT sector is concerned. Before coming back to some of the other earnings that have come in and what is expected, also wanted to get a sense on the shares of gold financing companies, Manish, with this RBI publishing draft rules for loans against gold. What is it that one's approach should be? We have seen in the past, how RBI has continued to keep their focus on this space, cautioned against, probably too much of a lending happening, unsecured lending as well. At what rates do they do this? So a lot of these rules will bring in a lot of clarity for these financiers, but will it mean some dampening impact, at least for the near term, despite gold prices being at an all-time high?
Possibly, and I think one must really wait what RBI comes out with, right? There is no harm. I mean, there is no point in terms of presuming or having any preemptive assumptions related to the same. Obviously, Muthoot as an entity has a significant exposure to gold as a portfolio. If I'm not mistaken, more than 95%. Manappuram is around 50 odd percent. IFL Finance is significantly lesser at 21 odd percent. Now, looking at the guidelines, if you probably look, Sakshi, in terms of the entry or the origination LTV and the exit LTV, because gold prices have moved significantly higher, the exit LTV and the original LTV, there is a huge gap that has probably formed. That probably makes us believe that with RBI clamping down on unsecured lending a few months back, I think a lot of investors probably resorted to gold financing as an option to probably get their advances in place. And that is where the fear of RBI is, that if this continues for a longevity of time, does this mean that the quality of borrower who is coming to gold financing companies, and if he is not able to repay, create some element of stress within the system itself? I think that would be the thinking, in my opinion, what the regulator is probably looking at. And therefore, I think one must really wait out for the final guidelines to come through. No harm. I think once it comes through, you can make a structured decision in terms of, as we spoke, which companies probably get affected the most or the least, and then probably take.
Okay. Kunal, gold prices at an all-time high internationally, $200 an ounce is what we are seeing amidst the growing uncertainty, plus things changing regulatory as far as the gold finances are concerned. Would you bet big rather on the jewelry stocks like a Titan or a Senco at this point in time rather than looking at gold financiers? How would you really navigate the fresh challenges?
Well, definitely I'll be looking after gold jewelry stock only because the way all the stock has been trading on a daily chart, I think we may see a further upside momentum in this counter. And let's talk on this Titan, the way Titan has been trading on its daily chart. If you talk about hourly chart, stock has been trading over its 100 and 200 MA, and on daily chart, recently stock is trying to give a breakout of its 3190 level, trading at 3228. One can get into the stock at present level. If you talk about upper side target, then first target comes at 3275, and if stock breaks this level, then further upside would be there up to the level of 3400. So yes, definitely risk reward is in favor for creating a long position. Downside strong support comes at 3150. So Titan looks very attractive amongst other gold jewelry counters and even amongst other gold finance counters.
Okay. Mayuresh, the other space that's in focus today is the pharma space. I think strong momentum that can be seen. Of course, a lot also has to do with the tariff cost that we are seeing. But how would you really look at pharma? Because Donald Trump has already indicated outright that pharma will be the next sector that they will be looking at, and pharma tariffs will be coming soon. Do you think that also will be put on the back burner, at least for the interim? And what should one do in this bounce? Should one really exit? What should one do as a position?
No, so it really depends, right? What Trump will tweet or not tweet. So it's going to be very interesting. He's already mentioned that he's going to hit Pharma hard. But again,
Yeah.
Sakshi, it's just not possible. I think if you look at Eli Lilly's management, and their comments were very, very clear, crystal clear, in fact. The cost of
Yeah.
producing a new drug, is around $6 billion, and it takes 3 to 5 years, anything between that timeline. Again,
Hmm.
in terms of the generics that a lot of countries outside the US produce, and specifically I think China and India, one of the biggest and largest that are doing that. The cost is significantly lower because of the FDA practices that India follows, and at the same time being very, very cognizant in terms of keeping costs in check. which probably ensures that the end drug costs in the US are very, very low as far as the end consumer is concerned. Now, even for the end consumer in the US, I think a lot of these consumers do not have the advantage of Medicaid, and therefore it's a large part of out of pocket that they're probably paying. If you assume a lot of tariffs to come through at this juncture without no production happening in the US or very minimal production happening in the US, and minimal scope in terms of generic development if this continues, the cost of drug delivery goes higher, which is not going
Yeah.
to be helpful for the end consumer. And therefore, in my opinion, I think this probably seems a little bit improbable. Even if this happens, there might be a rollback that might come through very, very swiftly. And therefore, I think anybody who's holding qualitative leadership pharma stocks should continue holding. Sun Pharma, Lupin seem to be very, very lucrative in terms of the entire pipeline that they've probably got and in terms of the earnings pedigree. But if such an announcement is made, obviously the sector will take a hit sentimentally and an earnings perspective as well. But in my opinion, I think it should not happen with the logical
Yeah.
instruments that one has in place.
Okay. Before I let you go, Mayuresh, I'll throw in one last question to you, and that's on the markets. I mean, 90-day at least we have some relief going from the tariff talk. We have already had like a quite a meaningful fall in the recent past, and all of this recent 1.5 month of turmoil was due to the tariffs. What do you foresee for the markets? Do you think one will be in a better position to expect the erstwhile highs to be tested again with the tariff pause coming in now?
So I think it's the base case scenario, Sakshi, at least with the relief that has come through, is that there might not be any incremental heavy selling that will happen in the market, right?
Okay.
So
Mm.
incremental heavy selling probably is now getting ruled off as we speak.
Mm.
There will be bouts of volatility. Nobody can avoid that with statesmen coming to and fro. The spillover effects, as we just spoke in the opening remarks, as far as China is concerned. And therefore, I think heavy selling ruled out for the markets. Does that mean that Indian markets get re-rated significantly because of these events at play? I think we'll still have to wait and watch on what probably happens. The only thing, two things working in favor for India will be earnings expected to pick up as we head into the second half of this financial year. And second, I think a lot of our macros, including inflation, liquidity, government capex, private capex coming back, consumption coming back very strongly, better monsoons, and expectations of key data points like PMI on the industrial front and gross fixed capital formation, because of a combination of these factors should actually improve. और इसलिए मैं कहता हूँ, I think दुनिया कहीं भी जाने दो ये वर्ष, I think सारे जहां से अच्छा हिंदुस्तान.
That's the line. सारे जहां से अच्छा हिंदुस्तान हमारा, यही हमें focus करके चलना है. Great, Mayuresh, always to speak to you and to seek all those insights, and your optimism does spread wide on the markets as well. We are at 22,800 already. So let's hope that this only goes on to getting better. Hope you have a fantastic weekend ahead. And this one is going to be another long weekend.
Yeah.
And we hope that, we'll be back to brighter times when we come back on Tuesday again. Thank you so much, Mayuresh, for being with us.
Thank you, Sakshi. Always a pleasure being on your show. I think for investors, I think just keep the faith and have patience. I think the markets go through these phases, but as we come out of these phases, I think the longer term always remains better for equity investors. So thanks again. Thanks for inviting.
Thank you so much. So stay put and have the faith in the long term is what Mayuresh is pointing out. Kunal, we'll continue our conversation with you. Now I'm going to be first asking you, first 15 minutes of a candle is out. How are you placed on the market?
Well, no doubt, first 15 minutes the market is trying to sustain at the present level 22,717. So we can say that further 120, 130 points of momentum that we can see during the today's trading session up to the level of 22,900. But yeah, I'm not going to tell about going long or going short at present level, because no risk reward will be in favor for creating any fresh position.
Okay. Spotting some stocks, Kunal, what have you looked at in the first 15 minutes? Where would you be comfortable to take a trade?
Well, if you talk about stock side, and we have been witnessing very magnificent momentum since last 3 days, and a few stocks are there which looks very attractive, particularly on present level. And one is from IT sector itself, which Infosys right now. Infosys is trading at 1421 level, and I think time being it has created its bottom, so one can get into the stock at present level. Downside support comes at 1380, and if you talk about upper side, the first target comes at 1460, and if this stock breaks this level, then further upside would be there up to the level of 1514. Now this is for intraday to positional, but Infosys looks very attractive for medium term to long term. We may see some good upside momentum even up to the level of 1900 to 2000.
Okay, fair point. I hope this names are something that all of you have noted down. I want to ask on Anand Rathi Wealth after the earnings. The earnings have been okay, 30% of an uptick year on year, and we have seen a continued growth for this one, 1.3% higher, 1791. Do you think the momentum will continue? Should one really look at this post earnings?
Well, as of now, I'm not seeing any clear direction. The counter is trading at 1719, 91 level. It has been trading in a range bound momentum since last 4 to 5 days. Upper side, it has created a resistance at 1840, and downside it has supported 1744. So I'm not going to say any particular direction until stock breaks this level.
Okay, fair point. Let's again look at some of the other ideas that one can actually look at in trades today. We have this pocket that's also buzzing, the Nifty 500. So let's try to spot some stocks from that aspect as well. The broadest index, we are seeing a lot of momentum. PI Industries 6% higher. Wealthfund Living is also up and about. You have Olectra Green Tech, LT Foods, that's buzzing in this space too. A lot of action. You now have Keynes Tech, that's 5.5% higher. NetWeb Technologies, Intellect, a lot of these specialized IT firms that are buzzing in trade. कुणाल, निफ्टी 500 में से आपको क्या समझ में आ रहा है अभी ट्रेड लेने के लिए?
Well, a few stocks are there which looks very attractive from this Nifty 500. If you talk about Tata Motors, we have been seeing a very good number from the JLR, and Tata Motors right
Yes.
now trading at 607 level. So Tata Motors looks very attractive. If you talk about level wise, then the way stock has been trading on its daily chart, one can get into the stock with the strict SL of 580. And if you talk about first target, then we may say very good upside momentum up to the level of 614. Afterwards, even it may touch up to the level of 660. So Tata Motors, one can keep an eye on the stock. And yeah, second counter, if you talk about then net web, it's from IT itself. It's small cap. One can even get into the stock at present level. The way stock has been trading on its daily chart, I think we will see a further upside momentum. The counter net web is trading at 1492, and it has a multiple support at 1370. So one can keep an SL at 1370. If you talk about upper side target, then first target comes at 1680, and if stock breaks this level, then one way upside momentum would be there up to the level of 2000. So Tata Motors and NetWeb looks very attractive from this Nifty 500.
Absolutely. We'll keep an eye out on that. What about metals? They're also rallying in trade. What would you say here?
Well, yes, definitely means amongst other sectors, I think Nifty Metals is outperforming other sectors, and VEDL looks very attractive. Not on the means it's a very good dividend paying company as well. And from the present level, even we may witness some capital gain from the present level. One can get into the stock at present level. Right now, stock is trading at 383 level. Downside. Downside support comes at 316. No doubt, SL is at little bit lower level, but volatility is too high, so we have to keep this SL. If you talk about upper side target, then 400 would be our first target. If stock breaks this level, then further upside would be there up to the level of 445. So risk reward is in favor of creating long position. Double bonus momentum would be there in terms of capital gain and in terms of dividend pay.
Okay, got that. A lot of these fertilizers, chemicals, agri-focused stocks are also coming back. Remember, agri was also being seen as vulnerable to the tariffs, and yet now after this pause, they are also rallying in trade. Avanti Feeds, Chambal Fertilizers, you have a whole host of them that are rallying in trade. And of course, we will be heading into what the expectation from the monsoons this season is. Your suggestion here on the fertilizers, chemicals, agro space, any key stocks that you like here?
Yes, definitely. If you talk about agri stocks and amongst this stock, I think Chambal fertilizer looks very attractive at present level. If you look at the chart, the stock has given a breakout of its rebound momentum in which it was trading for more than a month, and right now stock is trading at 644, and it has been trading in an uncharted territory. So further momentum would be there, further rhythm would be there that we can see in the counter. One can get into the stock at present level 644. If you talk about SL side, then downside strong support comes at 610, and if you talk about target side, then first target that we can say is the 690, and if stock breaks these hidden resistance, then 760 would be there. So amongst the other fertilizer counters, I think Chambal do some we may see some good return from this counter.
Okay, got that. So that's the fertilizers and the chemical space that can be in focus yet again. Let us actually look at some of the other aspects. In fact, let's look at the Nifty yet again. It's at the day's high point, and you can see a near 2% of an uptick on the Nifty, and turning out to be a Friday. We can be inching closer to 22,900 now. Kunal, what are the chances that 23,000 will be upon us today?
Well, no doubt, means it's not surprising if Nifty touch 23,000, but more important point is, at 22,900, Nifty has a strong resistance. So Nifty
Yeah.
has to give its closing about 22,900 to fill that gap which Nifty created on this Monday. So yes, definitely, if Nifty breaks this level, if Nifty give its close above this 22,900, then on a daily basis and even on a weekly basis, we will get a confirmation for an upside momentum up to the level of 23,400 to 23,800.
Okay, got that. So that will be about the Nifty at this point in time. There is a strong momentum that we are seeing across the board. That's something that's moving. But I also wanted to ask you on Keynes Technology and on Dixon Technology as well. What's happening here? These are the stocks that are buzzing yet again. Any suggestion? They've had their fair share of downtick also, Kunal. Do you think they can again be in focus for traders?
Yes, if you talk about this Keynes and Dixon, let's first on the Keynes right now trading at 5,090 level. It has given a gap up opening and trading with a positive rhythm with above average volume. And we may see a good upside momentum even in the counter up to the level of 5,480. And if stock breaks this level, then further upside would be there up to the level of 6,000. So yes, one can get into the stock at present level with strict stop loss at 4,850. And if you talk about Dixon's side, the way stock has been trading on a daily chart, even Dixon looks very attractive. It has given a gap of opening on daily chart, and even it has given a breakout of its previous resistance which was placed at 13,570. So this stock looks very attractive amongst other IT counters. One can get into the stock at present level. We will keep 13,300 as our SL. If you talk about first target, then first target comes at 14,700, and if stock breaks this level, then 15,450 would be there.
Mm, okay, got that. I hope this has also helped all our viewers really get a sense of how the markets are moving in trade today. Another space that I wanted to discuss is the consumption space as well, Kunal. We have been focusing on this space, quite a lot, especially after the new financial year has started. Remember, the budget announcements have started to kick in 1st of April, and the tax cuts will be definitely benefiting people with more money in the hands. Now, there was this also RBI rate cut that happened before we went into the holiday. So, both fiscal and monetary policies aligned that could probably spur consumption. And, there was a lot of aspect that credit growth could also again take an uptake. How would you really look at consumption at this point in time? What will you be betting big on in this theme?
Well, truly said, as per means the way RBI cut its repo rate, I think we may see some good upside momentum in
Yeah.
consumption theory, and based on that part, I think Nifty Auto trading up by 1.68%. Not only this, FMCG and Nifty Consumer Durable as well, trading more than 1.5% in today's trading session. So we have already talked on this Tata Motors, but if you talk about other counters, if you talk
Yeah.
about durables, then we have already talked on the Titans. Now let's talk on this Voltas, the way stock has been trading on its daily chart right now, stock is trading at 1297. We may see a very good upside momentum into Voltas, and the way heat is taking its place on in Mumbai and overall India. I think demand for the AC will be on high during this quarter. So Voltas will be on limelight based on this demand rise right now trading at 1295. One can get into the stock at present level with strict stop loss of 1220, and if you talk about first target, then 1370 would be our first target, and if stock breaks this level, then 1590 would be our ultimate target. So all these companies are from Tata. All these companies are belonging to Tata pedigree only. Tata Motors looks very attractive, even Titan and Voltas also looks very attractive.
Absolutely. Well, thank you so much then, Kunal, for being with us on the morning edition today and helping us navigate through all of the aspects on the markets. Let's hope that this improves for the better. We're already at 22,850, but you did point out that 22,900 will be the key resistance, and one really has to close above that to really ensure that, yes, we could again go back above 23,000 odd levels. That's something that you've talked about, but you would like to play as it goes. So remember, we are again heading into a longer weekend. So tonight, what happens in the US and thereafter what happens on Monday's trading session in the US and the Asian markets, 2 days of a move will again play heavy on the Indian markets, and therefore one has to be very, very cautious because things are floating by the day, things are changing by the day. We do not know what will be the outcome of what new statements come in. Every day we've been seeing US President Donald Trump make some new statements, and of course as a reaction, the worldwide, a lot of countries taking their positions on the tariffs, and that's what's happening. So one has to be very, very cautious. At the same time, both our guests today did talk about that how India is better placed for the long term. This phase shall pass and it will take a little bit of time, but things might settle down. In the long term, you can actually continue to hold on to your strong fundamental names which you have kept for 5 years, 10 years on. Although as a trader, you have to be very, very careful at this point in time, is what our guests have really mentioned. But a strong momentum on the Nifty. It's turning out to be a Friday, 4D straight, 22,855 on the Nifty. There's a 455 point of a jump, now 2% higher. The Nifty Bank above 51,000, Sensex above 75,000. Mid and small caps higher in trade. All the sectors buzzing in trade. IT, metals, auto, pharma, you name it. All of these stocks and sectors are actually showing us a strong momentum. But let's see whether this garners more pace, or is this being used as just sell on strategy by traders? Something that we will continue to tell you throughout the course of the day. So stay tuned. It's an action-packed day. You will be hearing from today onwards top managements reporting their numbers on earnings conversations. TCS, Anand Rathi Wealth will be on our channel, and of course at 12 noon I'll be back with answering all your stock-related queries. So stay tuned for that and keep sending your queries as well. Many thanks for tuning in on the morning edition.
A man of vision, a pioneer in luxury. Darshan Mehta, an eminent retail professional and the former managing director of Reliance Brands, passed away on April 9 in Hyderabad after a sudden heart attack. He was 64. An avid runner and trekker, Mehta was at the gym doing what he loved when fate intervened. He leaves behind his wife, a son, and a legacy that changed the face of Indian retail.
All the mainstays of the strategy have remained intact. One of the first strategy was, we'll never chase scale. I always believe scale is an outcome. And moment you start chasing scale, especially in fashion, you are always going to go 3 steps ahead of what I call the optimum distribution curve. And when you over distribute fashion at any level, any brand, any category, some of the oomph and the halo around that brand, goes away. So I always tell people, if you have a choice, think more right brain than left brain.
Okay.
Left is all about size, scale, volume, when will you hit the first 100 crore, 500 crore, 1000 crore, 5000 crore, all of that, etc. Look at customer delights, look at raising the bar, look at create experiences. And India automatically scale will happen because we are sitting in a country where we all know the demographic dividend, and we all know this country is about new wealth getting creation, but new aspiration along with that wealth getting created. So if you consistently do something with sense of freshness and reimagination, and it's a daily job, scale will be an outcome. So where we are is an outcome, but we never chase scale.
A chartered accountant and cost and works accountant, Mehta began his journey at PwC and went on to lead at Trikaya Grey Advertising and Arvind Brands, where he introduced Tommy Hilfiger, Gant and Nautica to India. But it was in 2007, as founding CEO of Reliance Brands Limited, that Mehta truly reshaped the Indian luxury market. From Burberry to Valentino, Balenciaga, Tiffany & Co., Xenia and Jimmy Choo, he brought the world's top names to Indian stores and Indian closets. His strategic acquisitions further cemented RBL's dominance. In 2019, he led the buyout of Genesis Colours, a key player in Indian luxury fashion. That same year, he acquired iconic toy retailer Hamleys, expanding RBL's footprint beyond fashion. More recently, he spearheaded investments into brands like Abujani Sandeep Khosla, Rahul Mishra and Manish Malhotra, elevating Indian couture to a global stage.
It's obviously very fulfilling and yet very exciting, because at times when you look in the rearview mirror and see, how far and how long we have come, it's obviously very satisfying. But when I look at the windshield and see where we are going, I think there's far more exciting ahead. So it's a toggle between the two. 2021, we completed 11 years since the time we opened the first store.
Right.
And about 13 years since I started the company. And yeah, here we are.
He also built India's newest luxury retail hubs, Geo World Drive and Geo World Plaza, redefining the shopping experience in India.
When I started, and many of us who grew up in the 80s and 90s, middle-class Indians, we were always taught that if you have it up here, you don't need to show it here.
Right.
And the word luxury sounded also a bit hollow. It sounded, in fact, there's a bit of a disdain to the word luxury, more often than not used in a negative connotation. I think through lots of storytelling, because luxury is about heritage, it's about history, it's about all the efforts that have gone into a lovely dress or a pair of shoes, all of that, etc. And doing it consistently, we've now seen a full swoop where customers come and actually talk about what's gone into a beautiful jacket, or what's gone into a particular denim that someone's wearing, and understand, as I said, a combination of the artisanality, the contemporariness, and at multiple levels, at the fabric level, at the stitching level, all of that, etc. So the theater and the storytelling that luxury puts up, has actually paid off, and clearly definitions change and change, in many ways. Just over the last weekend, we opened a beautiful new center, the Geo World Drive.
Yes.
I was there both days. It was a long labor of love coming to fruition. And one of the common comments I heard back from people was, this place is so luxurious because it's unhurried.
His model was clear: high return on capital employed, brand integrity, and long-term value creation. In November 2023, Mehta stepped down as MD and assumed the role of non-executive director, leaving behind a stable and visionary empire. The Retailers Association of India hailed him as a man who brought global icons to Indian shelves and shaped an entire industry. He ran through over 100 cities across the world, but it was India he helped run ahead. Bureau Report, Business Today TV.
If you like the video, do like, comment, share and subscribe.
The two economic powerhouses of the world.
United States and China, $50 trillion in GDP, 43% of the world's total. In an unprecedented face-off, each waiting for the other to blink. It started with this announcement.
Conference reciprocal tariffs, and very simply, it's if they charge us, we charge them. That's all. And then I'll see some rebel Republicans.
Since then, it's been a series of tit-for-tat tariff announcements and other retaliatory measures against each other. The United States announced a 10% baseline tariff effective 4th February. On the 10th, China responded with tariffs on US coal, LNG, oil and agricultural machinery. The same day, the United States hiked tariffs on Chinese goods by another 10%. 2 days later, China retaliated by penalizing imports of American farm products and slapping export controls on US companies. Earlier this month, the United States announced 34% additional reciprocal tariffs on China. It also closed a loophole which allowed imports of cheap Chinese goods. China hit back with its own 34% duties, export controls on rare earth materials, and more restrictions on US companies. Tensions heightened on 7 April, with US threatening another 50% tariffs on China, who termed it blackmail. A day later, the 50% tariffs kicked in and China reacted with increasing 84% tariffs on American goods and more restrictions on US companies. The next day, the United States raised its own tariffs to a whopping 125%.
China wants to make a deal. They just don't know how quite to go about it. You know, it's one of those things they don't know how quite. They're proud people. And President Xi's a proud man. I know him very well. And they don't know quite how to go about it, but they'll figure it out. They're in the process of figuring it out, but they want to make a deal.
China was one of America's largest trading partner in 2024, fourth only to Europe, Mexico and Canada. The two countries had $582 billion in trade, with China enjoying a large surplus. China has reacted strongly, calling on the United States to stop its arrogant and bullying behavior.
中方的立场是明确。
China's position is clear and consistent. The door to talks is open, but dialogue must be conducted on an equal basis with mutual respect. China will stand by its position until the end. Pressuring, threatening and blackmailing are not the correct ways to deal with China. We hope that the US will work with China